we need to understand we are in the financial markets. It's kill or be killed. When I lose money, that means someone else made money from my transaction. Doesn't matter if it's prop firms, doesn't matter if it's personal account. If you are not profitable, you will lose. And everyone that is like, oh, but prop firms are so bad, go into your personal account, make money off of that. The likelihood of someone being able to flip $500 into $10,000 is barely zero. And if they're unprofitable, it's closer to zero than I can even imagine. So in one trade, two trades, the account is going to be gone too. It's the financial markets. You need to understand this is kill or be killed.
Nowadays, from what I can tell, is that a lot of people coming in potentially, but a lot of the time they're coming into, let's say, SMC, ICT. How's your experience been in terms of seeing people take on a more simplistic approach? What are their characteristics like? So are they consistent people? Is there anything that really stands out as a reoccurring theme in those who see that progress?
One theme that I see within all of the people that were successful inside of the community was that
Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you.
Welcome everyone back to the Words of Rizdom Podcast. We are back once again, and we're still the number one podcast in the trading space, the fastest growing, thanks to all of you and our incredible guests. Talking of which, today we are joined by no stranger to the podcast, the man himself, Mr. Kimmel Trading.
Thank you for having me on.
It's my pleasure. Thank you for being here. I know obviously you weren't, in the UK often, but we got you here. We shot some really cool stuff just before this as well, so I'm excited to get that out. But it was only right that we get another podcast in,
Yeah.
Last time you were here, Kimmel, though, you were trading, obviously, prop firms, still trading prop firms, but at that time, it was primarily CFDs. You were over $1 million in funding at the time. Obviously, since then, unfortunately, there's been a lot of changes in the industry, changes to, obviously, your amount of funding in the CFD space. But you transitioned to futures. I don't know if you're only doing futures or not, or you're doing both still. But talk to us about that, because that's what a lot of people are going through at the moment. And I know a lot of people are very reluctant when it comes to making changes, and probably because they're a bit naive and and that's not a negative thing. It's just that they haven't taken the time to research, or they're a bit worried that you can't transfer that skill. But what's it been like for you?
Yeah, so when in the beginning of the year, we had the whole prop firm fiasco happening, and I went from over $1 million in prop firm capital all the way down to 200K because I had over 20K in payouts denied. Well, not denied, the companies just went under, and I needed to find a way to still have an edge in general, because I think that prop firms in of itself, they give you an edge given the fact that you're playing a numbers game besides only a trading game. So that's when I went into futures trading, and I wanted to completely learn a new market, because like that, by learning a completely new market after 5 years in, I would be able to understand, okay, if I am put in any situation in trading, can I still make money from it? And so I looked at the futures market, in specific the NASDAQ or ES, like either one of those, and I thought, can I become profitable with it? And that's the journey that I personally went on. And I went from zero into funded into getting a payout. So, and I documented everything. Not only that, but I also traded live for the third month, if I'm not mistaken. For the whole of the third month that I was learning, I documented all of the trades that I took live. And from zero into documenting everything and getting funded, getting the payout, I was playing the game of, I am now putting money into these prop firm challenges, which at this time, at this point, there were 150K accounts that were selling for $50, which was nothing. And I was able to spend a total of $500 and get a payout over of $10,000. So I remember that in the video that I got funded, basically the company that I was doing this with, what they did was, the price was first $250 for the 150K account, and they changed it to $50. All of a sudden, I was like, why am I doing the sustainable route? And because I was risking 0.5%, trying to show the people that you can get funded, so on and so forth. And then I was like, I'm not playing the same game as people that are coming into the markets. And so what I started doing was I started buying multiple challenges, risking the whole drawdown, and then trying to get funded. So it took me 3 tries, if I'm not mistaken, of the $50 challenges to get funded with the 150K. And that 150K, I ran it up to over $10,000 in payouts. So I put $500 in, and I was able to take away more than $10,000. So when I see people hating on prop firms, I genuinely don't get it. If I would have put $500 into a personal account, I would not have been able to make $10,000 in 5 months. It's borderline impossible, and if you do it, it's probably gambling. Why? Because to do a 20x on your money, you're probably risking all of your account and hoping that it's going to go into profit. And the other reason as to why I moved into futures is because I saw this shift and I noticed, okay, multiple firms with futures have been around for a long time. So it's kind of a proven concept, just like FTMO and other companies. And I wanted to be a trader. But until then, I identified as a Forex trader. And every time I was already helping some people with FX in general. And there came a point where I had this existential crisis in this year. And I thought, my God, I'm making good money with NASDAQ. Why am I just trading FX? And that's where everything clicked. I talked with a performance coach and he was like, well, but a trader is an all-around trader. It's a trader that can be put into any markets. Doesn't matter if it's range-bound, impulsive, reversal all the time. You should be able to trade that market. And that's where this shift happened, that my idea was I want to become a trader. I don't want to become a Forex trader. So to me, if someone tells me, oh, right now you can only trade gold, even though it's the pair that I like the least, I know that in a couple of months, I would be profitable with gold and I would be able to make a full-time living from gold. So the goal for everyone that is watching is it's not about being a particular type of trader. The best traders I know, whatever market they're put in, they can be profitable. And what they do after is, what is the market that is easiest to trade? And then, because people see crypto going up, where do you think most traders make the most amount of money? It's in the crypto bull market or bear market where it's just moving lower? Because it's the easiest things to trade. And so if I know how to trade the market, I can then apply it into the easiest market to trade at that particular time. So I've done it with futures, I've done it with crypto, I've done it now with FX over the last 5 years. So now it's all about adapting to whichever market looks better.
So it's just being adaptable, as you say, to the market conditions, what's happening in the sentiment of the industry as a whole. And at the end of the day, you know, you want, as the futures side of the prop firms, I think is growing. You know, as you say though, like, I think the original futures prop firm is older than FTMO. I mean, they were the one who set the blueprint in the future space, which we only started to learn when all this stuff started happening, which is incredible to see because it shows that there is longevity there. And as more futures firms enter the space, which I think is good and bad, you know, good being that you get more options, you know, more funding. The negative being that will we see the same as CFDs, which I think is possible. It's just the nature of, unfortunately, I think, how to say it, like, inexperienced CEOs, inexperienced business people just assuming by undercutting and offering better rules, that's the way to get market share. But as we've seen already, what ends up happening is these issues, right? These issues with liquidity issues and so on, because then you break the model. You know, statistics, it's all really just an edge that the firms have where, in terms of mathematics, of knowing that, okay, this much drawdown, this much this, whatever it may be, all the different parameters, this is a profitable model where, you know, profitable traders can still, you know, use this and utilize this to scale funding and get funded and get payouts and essentially become full-time or get their personal accounts or whatever it may be. But then when competition comes in, unfortunately, people just come in and think, okay, how can we make noise? Okay, we can make noise by just completely changing this, you know, one of the statistics, one of the numbers, and that's all it takes, you know. So it'll be interesting to see how it goes. I think there's apparently 20 new futures firms coming. I don't know dates and stuff, but it'll be interesting to see. Hopefully they'll learn from from the previous one, but I think human nature will prevail. But one thing you mentioned there, which I think was so important to highlight, was in terms of the risk. Like, so when you do the challenges, because you can. So people will have differences there, but because you can afford to buy these challenges and risk higher on the challenge itself. And we can talk about that as well in terms of like how does the challenge differ to the CFD side. So like CFD side is like 2 steps, right? For the most part. Is futures the same? You know, you're risking more on the challenges, but what's your risk like when you're funded? You know, to get those payouts, like what did you risk then? And how do you handle sort of the trailing drawdown if there was any for that challenge that you took? Statistically, you have better odds of climbing Mount Everest than making consistent money from trading. Now imagine you're given a book on how to climb Mount Everest. It's written by someone who's done it, or you can train in person with someone who's climbed it themselves. If your life depended on it, which would you choose? That's the difference between information and implementation. This is why most trading courses fall short. They provide knowledge but lack real-world application. The Smart Trading Blueprint, founded by Casper SMC, is different. Not only do you learn the strategy Casper used to scale his trading to 6 figures a month, but you also get to sit with him live as he calls out trades in real time. This isn't just theory. Casper walks the talk live every day. He wasn't always successful. Casper once blew accounts like many of you, but after simplifying his approach, he's not only become a successful trader, he's retired his parents, helped hundreds of others do the same. Casper is so confident in this system, he guarantees you'll become a funded trader, no matter your experience level. Spots are limited, so click the link to apply now.
Yeah, it was very interesting because I've always been against trailing drawdown, especially on CFD firms. I was always against a trailing drawdown. But once you're put into the situation where now you're thrown into the water and it's like, okay, survive. And I'm like, okay, let me try futures firms. I have to abide by the rules, which is the first thing that I also want to say which is if you don't like the rules, don't buy the challenge. That's all that you have to do. Instead of complaining, oh, but the trailing drawdown, oh, but the consistency rules, just don't buy the challenge. Like I've always understood that if I'm paying someone for them to give me their simulated capital, then I have to abide by their rules. It's the same thing as you going into a job and thinking that you're going to abide by that the boss that is paying you is abiding by your rules. It's not going to happen. You follow the rules that are stipulated. So with the trailing drawdown, I had to adapt. And so what I did is that I focused on high probability trades in the beginning. So I was over the threshold of the trailing drawdown. And there was once where I got close to hitting the threshold, but I was able to dig myself out of the trailing drawdown. And from there on, it instilled very good habits in me, actually, which was proper risk management, like on the live accounts. Because as soon as I would get a payout, my number one goal was this next trade has to be a winner. And there's one thing that I really do believe, which is you can take fully control over your trading outcome. Like if you want your next trade to be a winner, you can make sure that the next trade is a winner. If you want the next trade to be a 10R, you can't guarantee that, but you can guarantee that you'll get a 10R eventually. But what you will have to understand is that if you want a high strike rate and a high risk to reward, you'll have to sacrifice on your trade frequency. If you want a high trade frequency and a high risk to reward, you'll have to sacrifice on your strike rate. So this is what I call the trading trifecta, which is strike rate, risk to reward, and trade frequency. You can pick 2. You can't control the other one. You can control your trading results by picking 2 of those that you want to focus on, but you can't. But then you will have to sacrifice on the third. And the trailing drawdown did exactly that. So now I'm faced with this situation that after I get a payout, I still have $4,600 of my money inside of the prop firm account, which I don't want to blow because that's my money. Well, technically it's not my money, but if I want to withdraw it, I can. So I'm being very careful with this specific money that I still have there. So I was always risking less, building up a buffer, and then eventually once I was maybe $2,000-$3,000 in profit, that's where I would increase the risk a little bit to make sure that I get big trade, hit the consistency target, and then withdraw. And that's how I was able to make over $10,000 within, I think it was in 1 month, in the month of July, I was able to get a $6,000 payout and $7,000 payout. If I am not mistaken, those are the rough numbers. So that all within 1 month because of proper risk management and knowing when to size up. by building the buffer first. So the trailing drawdown, do I like it? Absolutely not. It puts what I've seen from a lot of people that I talk to is it puts more pressure on you, but it can instill good habits. But at the end of the day, you'll have to go to personal account. Like with prop firms, with futures prop firms, I don't think it's something to take. It's not something with longevity, holding an account and then being very careful. You would be better off just being on your personal account. So all of that money went straight into a personal account, which eventually I'll be trading. I don't know when. It's just, this is futures money. This is my futures account. So I'll trade that eventually. But yeah, the trailing drawdown, it's simple. You'll just have to adapt. And if you want a prop firm account, you'll have to adapt.
What's your thoughts in terms of the consistency rule? Like, how did you, because that's not something that is the norm in CFD space. So how did you go about that? Was that something you worried about, didn't like, but overcame?
That one was the worst one because I would have big trades running and I would think, man, what about the consistency rule? So I remember that on the second payout that I got, which was a $7,000 payout, I entered in a trade, a beautiful short, made $2,800. And then I was like, how much money do I now have to make without blowing it to be able to get a payout? And it was like $4,000. And I was like, oh my God. Because with CFD firms, I would just leave this account on hold, go into another one, and I would lock in the payout. With futures firms, you can't do that because you have to keep on trading until you meet the consistency rule. So the consistency rule was the one that I disliked the most. But again, if you want the money, you have to trade for it. And I think that the reason why futures firms are becoming so popular and that why the business model has lasted so much is because they have so many restrictions on top of you that it makes you fail way more often. And I've said this multiple times to multiple people, which is prop firms are not there to help you. The last thing they want is to pay you out. They will do everything for you not to get a payout, be it give you a higher account size that you can't handle. So think about this. Why don't they give you a $4,500 account? Let's say CFD firms, which is easier. If you have 10% drawdown, why give you a 100K account instead of giving you a 10K account? Because the likelihood of you blowing the full 10K is very low, while the likelihood of you blowing 10% is very high. So those are all tricks that they use in order for you to lose everything. You're not going to use proper risk management on a prop firm account because you'll be risking 10% per trade, basically, if you risk 1%. And it's the rules of the game. And you can make money out of it or you can lose everything. So the number one thing that I say, be profitable, know what you're doing, and then go for challenges.
You have to have that edge.
Yeah.
I mean, that's where most people really... It's really strange though, because you'd think that it just makes common sense. Like have an edge and then go to the firms. And the ones who do, if you notice, like the ones who have an edge and then go to the firms, they're the ones who are getting the payouts consistently. They're the ones that then get claimed to be the influencers and they're getting special treatment when in reality it's just that they have an edge and then they've gone to the prop firms. Versus, it doesn't mean that was always the case. They probably went to prop firms, failed, learned though, went and got their edge, then went back. Versus, I think a lot of people assume that, hey, I'll just keep doing it and eventually I'll find my edge. And I just think that mentality it's not one that's going to lead to winning. A lot of the time it just keeps you in that boom and bust loop over and over again where you might pass a challenge, you think this is my edge now. You might even get a payout. This is my edge. This is it. And then it fails. And throughout that time, you've said it's your edge, but you don't understand it because you've never broken it down. There's no rules. There's no journaling or data been done to really assess and define the edge. You're just freestyling essentially, but you're going through a winning streak on that freestyle, whatever that may look like. And don't get me wrong, it might be an edge, but it's not one that's been defined. It's just like these confluences that you've strung together and have worked for the last 3 weeks. And therefore you've gotten this confidence of like, I finally found it. And you might have. Yeah. But the fact that you then lose that count or lose that challenge or whatever it may be, then sends you into this negative loop where you're like, back to the drawing board. Yeah. And normally you'll take a break for a week or two or more. Then you'll come back and do the same thing over and over. And that edge is so important.
The problem is that people put themselves in huge pressure situations. So what I tell people to do normally, and this is obviously not financial advice, is that backtesting is not going to make you profitable, because backtesting doesn't put money on the bank account, right? So the first thing you have to focus on is the backtesting to become a statistically profitable trader, which means you have an edge, a statistically profitable edge. But the only way you can ever consider yourself a profitable trader and having a profitable edge is by trading the live market. And I'm not talking about demo trades. I'm not talking about a prop firm challenge here and there. I'm talking about personal account. Doesn't have to be a lot of money. Just put an amount that if you were to lose it all, you wouldn't really blink an eye. Like I personally, well, you have to be able to blink an eye to take it seriously, but not enough that you would fear taking a trade. So for me, I never went into demo. I don't like demo. I don't take it seriously. As soon as I'm on a demo account, I put 50 lots on. I risk 10%. Doesn't matter. So to me, I always wanted to have an emotional attachment to the trade, because that increases the quality of my analysis. It increases the quality of all of my trading. And so I started off with £1,000, and at that time I was making around £1,000 per month on the 2 jobs that I had, and the goal was I'm risking 1%. If I lose £10, it is what it is, but I don't want to lose £10 because I was extremely frugal. So the last thing I would want to do is lose £10. Funnily enough, when I closed that account, it was at £900, so I lost 10%. But in general, you need to be profitable within your first account, within your personal account, before you go for a prop firm challenge. Because if you go to a prop firm challenge, it will instill so many bad habits in you. It's ridiculous. And I felt this when I started trading with prop firms, that my trading became all over the window. And I talked with a few older mentors that I had, and I told them, hey, I'm so grateful that I only found prop firms 1 year in, because else I would be a completely different trader, probably way worse, probably would not be trading anymore because I would have no money. So for me, it was 1 year, only personal account. And then I was like, okay, FTMO account, 10K account, not a 100K account, not a 200K account. And this is what I mean with people put themselves in a high pressure situation. Because imagine this, I make £1,000 every single month. Now, all of a sudden, I'm risking £500 on a 100K account. How do you think you're going to perform when 50% of your income on a monthly basis is in that challenge? You're going to be extremely fearful of taking any trade. And if you do, what are you going to do? Oh, I'm going to risk 0.25%. Just go for a $10,000 challenge and risk 1%. It ends up being the same thing. So people need to understand that you just need to look at your current situation, not compare yourself to others, not compare yourself to me or to the top prop firm traders that they are. Compare yourself to yourself. Okay, where am I at right now? How much money do I have saved up? How much money can I dedicate towards this prop firm challenge that will make me take it seriously, but not gamble? So anything that is above 10% of your income, I think, is way too much, because eventually you will lose challenges. Now, do you want to lose 10% of your money that you make in a month on a challenge some people just lose in 2 days? Is that really what you want to do? And I've said this to a couple of my students, which is the last thing you want to do is go for an account that you then are going to be fearful of, because then you're not going to risk enough. And then you're going to go on a negative spiral and you'll lose the account because of exactly that. And so I came up with the concept of comfort number, which is exactly that. Okay, how much money am I willing to put into this account that is not going to make me fear it enough, but it's not going to make me so, complacent enough to then end up with bad habits. And that's really the comfort number that everyone needs to find. For me, listen, I've made great money with prop firms. I still, right now, after losing that $1 million in capital, $800,000 in capital, I'm now doing 100K accounts, because the whole income that was coming from those accounts was all stripped away. So now 100K accounts, like build it up again, build up the payouts, and then go for bigger accounts. Like most traders that I know, that we know multiple profitable traders, a lot of them still go for 100K accounts. I've seen this pattern so much. Why? Because I would rather go for a 100K account, risk 3% on the challenge, which I don't recommend to 90% of people, then go for a 200K account and risk 1%. It's better, at least in my opinion. So it's all about risk to reward at the end of the day.
Yeah, exactly. No, and for as you mentioned there, like you wouldn't recommend that to most people out there for the simple reason. The reason you're doing it is, one, you have the edge. You've seen the consistency already, so therefore the challenges at this point just become an efficiency thing of how try and reduce the time on the challenges where you're not going to get a payout versus because you're in a rush. It's more so just, okay, efficiency wise, risk to reward wise, I may fail one or two, okay, but once I get funded, I then have my risk protocols, my edge. I'm going to get the payout. It's going to pay for those one or two that get lost, etc. So yeah, definitely, worthwhile mentioning that. Majority of people probably shouldn't do that because they don't have an edge, right? And they don't have that consistency. You can make those decisions. They're not necessary decisions either. Like, even if you're consistent and profitable and have an edge, you can still decide to risk 1% or 0.5% if that's, it's what's comfortable to the individual. Like you say, that comfort number for you is that 3%, for example. That comfort number for the other person might be 0.25%.
Yeah.
And yeah, that's why I love about the podcast and just generally as well with trading is that there's no one, you have to do this. That's the only thing that works. It's quite the opposite. It's like what works for you will definitely not work for that person, but may work a little bit for that person, and they may take a little 20% off of you that help them to accelerate and so on and so forth. That's the beauty of trading. One thing you mentioned there in terms of like the formula for getting funded and sort of avoiding the demo, use your personal. That's something I always gave years back as well. Near the start of the pod, I might have mentioned it, but it was essentially like a process of do a free trial or demo first on like a similar account size that you're going to go for, only to prove that you can pass the challenge, whatever percentage it might be. Let's say 10% profit target 1 and 5% 2. Do that once or twice just to prove you can do it, right? You've done it with those numbers. It's demo though. Then open a small live account, what you can afford to lose. So for you, it was 1,000. Say for someone else, it might be 500 or 250 or whatever. Trade on that for a couple months. Again, showing consistency, live capital, really showing that you're not allowing greed to take over to try and flip the account, because that's when it's really going to come in, when you got that small capital. If you can prove it, then use the small profits that you made to then buy your challenge. So therefore, you're risk-free essentially in what you're doing. And then maybe the only extra step I did was go back to demo quickly, get used to the lot sizes if it's increased the account size, and then obviously go for your challenge, because then you've proven it. You've done the work, right? While most people, as you said, if I got into trading and prop firms were around, there was about 3 years before I found prop firms. But the thing is, I put the same money that I would have into prop firms, for example, into live accounts. So I still made the same mistake.
Yeah.
But if there were prop firms, I can imagine the habits would have been way worse, because it's much higher capital. The lot sizes are higher. The cost of admission, if you will, is way lower than, because I was putting in, originally I put in, it was £1,000, but then after a little bit I spent time saving, and I put in 5,000, put in 3,000, put in 2,000, so a bit larger. Then I lost all that. Then I was back down to my 200s, my 100s, my 500s. But if there was prop firms, I would have just done the same thing there. Which is an interesting point though, because a lot of people assume that prop firms is what's bad for the industry, and that's why they say, that's why they're against prop firms. But the reality being that if you have an edge, prop firms, personal, investor, it's all the same. Literally, it's all the same. It's just opportunity. It's leverage. It's your skill set. But if you don't have an edge, regardless of whether there's prop firms exist or not, you're just going to do the exact same. I've done it, and I've seen so many other people do it in personal accounts. You do the exact same thing. What do you think that is? Do you think it's literally it's just human nature, really, what it boils down to, and human psychology versus, these elements of the industry, such as like prop firms or futures firms or personal accounts? Is it more the human psychology that needs to be really identified versus blaming and pointing fingers at platforms?
Let's take a break for a minute there, guys, because I want to tell you about the #1 prop firm in the world, and that is Alpha Capital. Let's get straight to the point. You want a prop firm that consistently pays out, that has its own strong infrastructure, meaning its own technology and its own brokerage, which means that you get the best platforms to trade on, as well as having institutional experience as its founders and leaders. Now, let's just quickly look at the Discord here for the payout proofs. You're talking 6 payout there, 7 payout there, first payout. Look at all these payouts. in the Discord. Make sure you go check that out. Now, you can get 20% off all your challenges with Alpha Capital using the code RIZ. That's capital R-I-Z. 20% off thanks to the podcast and thanks to Alpha Capital. Go secure your challenge today. Now, Alpha Capital has also joined the future space. Alpha Futures has launched and is here today. Now, they are revolutionizing the space by offering the very best drawdown in the entire industry, including the 100K accounts and 150K accounts that they offer, and that's at 4%. Absolutely insane. On top of that, Alpha Futures does not trail your equity high or low for the day, meaning that if a trade goes back to break even, you do not have a chance of losing your account because of that. That's thanks to Alpha Futures. On top of which, they have no buffer zones or 60-90 rules on withdrawals like other prop firms in the future space have. Alpha Futures is here to revolutionize the space with the same team behind Alpha Cap. So make sure you use my code again, RIZ, all capitals R-I-Z, for 20% off your futures challenge. The links for both the cap and the futures will be in the description below. Check them out. Secure your challenges with the very best. Alpha Capital and Alpha Futures. Now let's get back to the episode.
Yeah, I think people really want a reason to feel good about themselves. And that's why the number one thing to do is bash on prop firms. Why? Oh yeah, but they're so predatory. Well, do you really think that your personal account, your personal broker is putting your 2 lots on, your 1 lot, your 0.5? No, they're paying you with everyone that lost money within that broker. Like, we need to understand, we are in the financial markets. It's kill or be killed. Like, when I lose money, that means someone else made money from my transaction. So doesn't matter if it's prop firms, doesn't matter if it's personal account. If you are not profitable, you will lose. And everyone that is like, oh, but prop firms are so bad, go into your personal account, make money off of that. The $500 that I put into the futures account and made $10,000 from, tell me how many people would be able to flip those $500 in the same amount of time into $10,000. The probability is, first of all, anyone that is not profitable, less than 1%. Why? Well, unless you do the $100 to $1 million challenge, whatever, that might be easier to do because it's not real servers. But if it's on a real server, the likelihood of someone being able to flip $500 into $10,000 is barely zero. And if they're unprofitable, it's closer to zero than I can even imagine. Now, if we're talking about a profitable trader, that's different. Maybe you can work your way around, risk a little bit more. But again, if you want to 20x your account, you'll have to risk more. So in 1 trade, 2 trades, the account is going to be gone too. And who do you think is going to keep the money? It's the broker. It's not some sainted entity that cares for you and is caring about your money. No, the money is gone. You don't have it anymore. The market has it. Who is the market? I don't know. But someone has it, and it's not me. So no matter if it's the prop firm or the broker, it's the financial markets. You need to understand this is kill or be killed. And people just want to find a villain in their story. Okay, I'm not profitable. It's because of prop firms. Oh, no, this person is profitable, but they're not actually profitable because they're doing it with prop firms, and that doesn't matter. Well, maybe it does. Because the only thing that matters is how much money can you get out of the market. Doesn't matter if it's from prop firms, doesn't matter if it's from a personal account, doesn't matter if it's simulated funds, because they don't seem that simulated in my bank account. Like, they don't look that simulated. Yeah. So the fact that some people can't wrap their head around the fact that you can make money from prop firms, and to be devil's advocate, a lot of prop firms are just straight up trash because they're making you fail. We saw that with the My Forex Fund situation where they were deliberately looking at the most profitable traders and making them fail. Like, I understand that the prop firm industry is extremely predatory because it's like, okay, this trader is highly profitable. How can I make them not get a payout? I had a student not long ago make $17,000 or $7,000. It was huge trades on 2 accounts. I think it was $7,000 on 2 trades on 2 accounts. And now he messaged me today and he was like, hey mate, I got my payout denied. And that's the worst part of the industry because brokers, depending on the broker too, they won't deny you your payout. But I can tell you, it's not going to be rainbows and sunshine with a personal broker. Try flipping $500 into 100K on an unregulated broker, some shady broker. They will also not pay you out.
Yeah.
So it's if I'm being devil's advocate, I understand why people hate prop firms. I really do. But as I said, it's the financial markets. There's nothing you can do about it. If you hate prop firms, go into the personal account.
Yeah.
Go into the investor route. It's completely fine. That was my goal in the beginning. I just saw the opportunity within prop firms.
Well, I think there's, as you say, there's pros and cons to everything. Not only when it comes to, say, platforms like personal or prop firms or investor capital, because there's pros and cons in all of them. But there's pros and cons into obviously the strategies that you use, whether you decide to be a scalper. What's the pros and cons of that? For example, the pros are, quick trades, in and out trades, not having to hold. While negatives is that you might not be able to capture very large trades, large moves. Plus, you need to be a very strict routine as a scalper versus, say, swing trading. It's a bit more fluid in terms of the routine, but your availability of trades is going to be heavily reduced, and you might be waiting a long time before you get that winner. You might still take those 1 or 2 losses, but now that's 2 weeks have gone by. So the pros and cons are there. And what that was leading to me, though, in terms of what you were saying about people's mindsets, 100% that they should be a bit more balanced and recognize you might not like prop firms. That's cool, right? It's understandable. But very similar, if not almost identical, is happening over here in personal accounts and brokerages. What does it boil down to, though? Spending your time to research good practices, good business models, good infrastructure, and so on. Same with the brokers, same with the prop firms. I mean, what's important to highlight as devil's advocate again is, let's say you're $1 million funded. $1 million funded versus $1 million personal, there's going to be two things, as we know that.
Yeah.
And I think the real consistent traders, they recognize that. It's not like they sit there and say, I'm the best trader in the world. I'm trading 2 million, and it's the exact same as trading 2 million as personal account. No one's ever said that. It's more so just like the mindset, and rightly so, I think, and that's the whole purpose of using it is right now I don't have to risk 2 million on my own, but I can use this to make 2 million on my own. And if it does go away, or if anything does happen, that's fine, because by the time that happens, I've made all my money and I can then focus on personal.
That was exactly what I was going to say, which is, for example, let's say I put $400 into an account and I get 100K. Okay, it's $10,000 in drawdown, doesn't matter. Let's say I'm just trading the $10,000. I put $10,000 into a personal account, and I put $10,000 and I get the $10,000 in drawdown of the prop firm. Then let's say I get a $5,000 payout, and on the personal account I also profit $5,000. Let's say I then go on tilt. I got the payout. Now I'm back to zero. So 10K on one, 100K on the other. And then I go on tilt. I lost the trade. I go on tilt. I lose both of the accounts. On my personal account, I lost $10,000. On the FTMO or on the prop firm account, I lost $500, and I got the $5,000 payout. Where the risk to reward is completely there. What is the problem? Is that this is a numbers game. Who is paying for these profitable traders? It's not the profitable traders. It's not the A book or not the flow that they have. No, it's unprofitable traders. Same thing on the personal account. Do you think no one kept your $10,000? And I wanted to tell this story because I was talking with a broker, a regulated broker, by the way, in Dubai, and they were like, oh yeah, so what do you want? So we can offer you a commission per lot, or we can offer you $800 up front for any customer that you bring on. And I'm like, $800? That because what they were offering me was $2 per lot. I don't care. I can talk about this because I don't affiliate myself with brokers. $2 per lot. Or $800, and I was like, so someone would have to trade 400 lots for me to be able to get $800. So it just makes sense to go for the 800. And I was like, what's the catch with the $800? He was like, oh yeah, so people have to deposit $1,000 and they have to lose everything. And I was like, oh, okay, no, thank you, right? But when I was talking with him, I was like, why would I ever do that? If I'm sharing, let's say I'm sharing the broker that I'm using, and my number one goal is for people to fail, Like, I would not be able to sleep well at night knowing that people have to fail for me to make money. It's ridiculous.
Well, that's why, let's say if you just referred it, that's one thing, that's fine. Like you have no control of how they, what their results will be afterwards. A lot of those sort of offers is what these signal, these sort of influencer signal groups do, because then that's why it's in their best interest to send these really bad signals. And a lot of them use really predatory practices in terms of unlocking that first lot by making them place the first trade, no stop loss, make sure it's placed with them live, probably not with them directly, but a team member, then cool, now we're on a roll, And the interesting thing is, from a broker perspective, it's not predatory, right, to offer that, right? Obviously, what the influencer or the trader or whatever it may be then decides how they do that, that's where it gets a bit murky. But going back to just the broker or prop firms, whatever it may be, they're not predatory even in their business model, right? It's I say it's more open now. I think there were times where people would say, like, it's real capital and we're copying the trades here and doing this. Not really much substance has been shown on that. I think the day that, if fingers crossed, but if data is ever monetized, as it's always been described and sort of promoted, that would be incredible to see. I'd love to see what happens to the industry if that was ever to take place. But for now, again, not something that seems to be on the radar or anything. But it's not predatory in the sense that it's, again, that up front, this is the challenge, this is the thing. It's predatory once people follow all the rules and then you deny, right? That's when it's really bad, of course. But as long as everyone follows the rules, for a lot of these good firms, they get paid out every time, consistently, no matter where you're from, no matter if it's a big payout or not. If you follow the rules, you get paid out. And that's same with the brokers, same principle. Because brokers, even the things they have as rules is like arbitrage and high frequency trading, stuff like that. That's the things that they don't allow. And the same thing happens. People try it. People try and find loopholes. And don't get me wrong, it's a huge thing when it comes to cheaters. But last thing on prop firms for you, unless you have something to add as well. But last thing to prop firms was more so the withdrawing, especially on the futures, with the trading drawdown. Like, what's your mindset with that? Like, because I know I've heard of some people where they withdraw and then they lose the account because they withdrew everything and it hit that drawdown limit. Yeah. What do you do? Like, how do you go around?
I withdraw everything, always. Because any money I can withdraw is my money. Mm-hmm. Because let's say, because I used to be an advocate of this first year into my prop firm journey, which is, leave a 3-trade buffer there. But the reality is, let's say I'm $105,000 in profit, $5,000 in profit on a 100K account, and I withdraw 2,000 and I leave 3,000 there. So now I'm 103,000. And here I'm not yet specifically talking about the trailing drawdown. I'm talking about CFD firms. Mm-hmm. If I then leave these $3,000 on the account and I take 3 losing trades, 1% trades, now I'm back to $100,000. So I just lost $3,000 that could have been in my bank account because I could have withdrawn it. While if you would have withdrawn the whole thing, you would be at $97,000, which again, is no big deal. Right? You can just crawl back or you can lose the account. Doesn't matter. You got the $5,000 payout. And so with me, it was always whatever money I can withdraw, I'll withdraw the full thing. Mm. And with the company that I was using, basically what they used to do is you would have to leave actually the whole buffer there. So it was a 150K account. The trailing drawdown was $4,500, and you would always have to leave $4,600 there. So it was always whatever money I had above that, I would withdraw the whole thing back to 154.6. Always.
Okay.
So
then that 4.6 is your drawdown left over.
And if I lose that, doesn't matter.
Mm. Like, unfunded, what would you risk? So in that scenario, let's say you withdrawn and you got 4,600 left. What do you risk in that?
$500 normally. Okay. Very, very low. Like, again, my number one focus was getting a good trade and going away from that threshold. Mm-hmm. So there was one time where I went on tilt actually, and I was very close to reaching the threshold, and then one trade, thankfully in this case, actually took me over the threshold period, threshold drawdown again. And again, to me, the focus was always, okay, now I'm back here. That's good. My goal now, profit, payout, payout. As long as the money is in the account, the money is not yours. Like we've seen this happening with multiple traders actually. And again, all due respect to everyone that trades live, everyone that documents their journey, it takes a huge toll on your psychology to have everyone always giving you the opinion. Oh, you did this wrong. Like not long ago, Umar Ashraf posted an $80,000 loss or like $80,000 drawdown, and he was like, guys, why are you telling me what I did wrong? And that's a reality with social media. If you're out there, everyone will know better than you. While I was live streaming, it was always funny that no matter what trade I went in, everyone was like, oh, that's wrong, it's going here. And when I was in like 90% drawdown, it happened 3 times. 90 enter, boom, 90% drawdown. And everyone was like, close the trade, close the trade. And I'm like, why am I going to close the trade? The stop loss is there for a reason. And then just completely reverses, hits my TP. And all of the times where it went to 90% drawdown, it then reversed and went to TP, or it just went straight to stop loss. And what I was saying is that there was 1 or 2 YouTubers, I don't know if it was 1 or 2, that were in like $200,000 profit on a prop firm account. And they would be able to withdraw almost all of it, if I am not mistaken. Yet they didn't. They withdraw a large sum, very large sum, and huge respect to that person because he profited a lot within 3 months with 20 accounts. And then went on tilt, lost all of those 200K. And that was money that could be in his pocket. So anything that is above the threshold of what I can take, it's in my bank account. Because while it's not in my bank account, I can't spend it. It doesn't matter to me. It doesn't matter for the prop firm because they just want you to lose it and I can't use it. So the money is not yours until it's in your bank account. And that's the number one thing that I live by within prop firms. And that is why I love to look for these hacks, so to say, of constantly get payouts. So instead of going for a 200K account, why not go for 2 100Ks and then profit on one, go into the other, then lock in this payout? Like, listen, my goal is not to have a $50,000, $60,000 payout. My goal is to make $5,000, $3,000, $2,000 if needed, withdraw, next account, withdraw, next account. Slowly but surely, like let's say you have 3 withdrawals of $3,000 each, you're at 9K for the month. Like, doesn't matter if anyone that is on social media is telling you that 10K a month is not good. Let me ask you right now, if your expenses would not be covered, you and your family, for 10K a month. The reality is for 99.999% of traders, yes. And that's one of the things I don't like about social media, just to go a little bit off topic. Most of the issues that people have in terms of psychology is not in terms of psychology, but it's about them comparing themselves to others. And because of that, wanting more and more and more, getting greedy, not understanding that, oh, I have $2,000 that I can get a payout, but this person made 10. Maybe I can make 10 and I'll get a little bit more recognition. And that happened to me. That happened to me after going to Miami the first time and I met everyone.
I was going to ask you that actually, like being around all these people, because it happens to us all, I think, but like being around such as like Kyle, Omar, Paladin, Casper, even meeting people like Umar, people like Wakala, just all these people that we've networked with over the last few years. And everyone's at different levels. Everyone's very highly successful, but, some are absolutely crushing, say, futures. Some are crushing FX. Some are crushing that particular pair. Someone's crushing personal and so on. Like, what was that process like for you then?
It was.
Let's take a break for a minute there, guys, because I want to tell you about the best trading tool on the market, TradeZella. The reason why TradeZella is the #1 trading tool that every trader needs is because you can do backtesting, automated journaling, trade replay, in-depth analytics, and so much more. And the greatest part about TradeZella is that it's all automated. All you have to do is connect your MT4 and MT5. It will pull all your data onto the dashboard. You can add playbooks, you can just add notes, you can add images from your trades, and you can get the insights that is necessary for you to progress as a trader. Now, TradeZella is for absolutely everyone. Whether you're a crypto trader, whether you're a Forex trader, whether you trade prop firms, it is for absolutely everyone. And that is why thousands of traders have signed up using my link here through the podcast. Make sure you use the code RIZ10 for 10% off your monthly subscription, or WOR for 20% off your yearly subscription. The link is in the description below. And let's get back to the episode.
It was I had to adapt really, really well, because for a long time I was going through that cycle of, okay, I can lock in $2,000 payout, but again, that's another like 1,800 that is going to, or 1,600 that is going to hit my bank account, instead of these people that they're making 40,000, 10,000. The number is so much better, it's so much bigger. Let me risk more. And then I was constantly getting myself into drawdown. And then my rational thoughts would be, okay, now let's get out of drawdown. So I was constantly hitting this, like this huge shifts that were happening, which was, I have a little bit of profit, I want more. And so I go, and so I risk more. I lose, so I go into drawdown. And now I have to crawl back out of drawdown by being a good trader, and then back into profit. Oh, I want more. And I had
in this cycle.
Yes, yeah, and it's really, really complicated, because doesn't matter how much people say comparison is the thief of joy. The reality is all of us compare ourselves. Like, it's human nature. Like, life at the end of the day is kill or be killed. Like, if we are going to our primal state.
Yeah.
So we are going to have this thing of comparing ourselves. It's extremely normal, but sometimes we need to understand that we're not at risk of being killed if we have a $2,000 payout instead of a $5,000 payout.
Yeah.
So for me, it was very, very crucial for every time I would have profit, I would think about, okay, what does this cover for me? And at that point, when I was living with a couple of people in the capital of Lisbon, and I was Portugal, sorry, and I was paying around 500 euros of rent. Monthly expenses were maybe 500 euros also. So a $2,000 payout covers for 2 months. So, and this is maybe in 1 week. So I would always have to ground myself into, wait, I'm not living someone else's life. Like, I'm living my life. So a $2,000 payout, yes, it's not a lot, but is it not a lot? Like, my mother makes not even $1,000 a month, and I'm out here making $2,000 on a trade that I can then get a payout that I just had to click one button, and my mother had to go 40 hours per week to a job that is not, maybe is not fulfilling. I don't know. She's actually happy with the job.
but it could be different.
Yeah, but for this, this is what I would think about. Every time I would go out to eat, I would go past these construction workers, and I would think, I just made $2,000 in this trade. These construction workers are literally selling their body, their physical abilities to this job, scorching heat, especially in Dubai. Like, if you want to ground yourself, go to Dubai and see the people that are working there. And that was a thing that really, really allowed me to ground myself. Okay, this is good. I'm living my own life. And then obviously, as things started to scale up, obviously your goals shift a little bit. But yeah, that grounding myself was the most important thing.
I think there's a bunch of points that you made there, which is so important, that we'll touch on. So, like, one being in terms of understanding yourself. Well, I think the psychological issues a lot of the time, yes, there are trading psychological issues such as like over trading and not having an edge and stuff like that, of course. But a lot of the reasons why we go on tilt, a lot of the reasons why we start trying to overtrade and so on, does stem from, I think, like the misconception of how much money you actually need to live, to sustain your life.
Yeah.
Right? Because that should be goal number one. I think what people do, and I did it for sure, so it's not like I'm saying people do it, but we all do it. But it's like, here's covering your expenses, maybe a bit more, because we're not just trying to cover our expenses, right? But essentially, here's the money that you're getting from your job, and maybe a bit more, right? And then there's here, which is your like goal life, like I'm traveling 3 times a year, I'm doing business class, I'm buying my family this, and my wife doesn't have to work, and my kids can get what they want or whatever, right? And I think we put so much emphasis on that top number that we forget how much freedom and how much clarity of mind and how much progress would be just in achieving that first one. And therefore, when we start then trading, as you say, you see a bit of profit, you start comparing, or you start saying, hey, I want that to get that number. And then you just go through this spiral. And I think people would be really surprised how much, if they just looked at, okay, this is my monthly expenses, My goal first is to cover them, right? That's goal number one. And I used to do this exercise with a lot of traders. I would have a sheet for them, and they would fill out the sheet, and it would be that's what one sheet would be, all their expenses. That would then put a calculation into the next sheet, and based on there's 3 I think factors, tax. So depending on country you're in, you'd put the tax amount, you'd put a prop firm amount if you're trading with a prop firm, and what the profit split was, and then it would tell you the exact account size, and then monthly return. That's the last one. How much monthly return you make. So you make 3% a month. Okay, 3%. Let's say 20% profit split in terms of the prop firm keeps that, and then let's say 20% tax. It will give you the account size, and 9 times out of 10, unless they lived in like London or Dubai, which most of the traders weren't, they were living in normal suburbs, rural areas. Theirs would always be like an account size like 50k.
Yeah.
Right, 50k. While everyone's chasing the 200k, $1 million in funding, in reality, and a lot of the time, the percentage return we would normally put like 5%, right? To be like not too high, not too low, on average 5%. So even if you reduce that, 100k account, right, consistently, normally, will cover most people. But again, social media, ourselves, it really comes down to ourselves of saying, I want to get that, and just completely forgetting what it really would take, how little it would take necessarily to actually get that first goal of covering your expenses, from trading, especially if you have a part-time, full-time job. If you've got that job, as well as then you're covering all your expenses with trading money as well, you've essentially nearly, depending what your income is, maybe doubled or at least like 50% more in income. And I think the slower steps is what people always skip. But then as you were talking about, other people, like comparing to others, I think it's such a valid lesson to learn, something that I just thought of when you were saying it, which is, your expenses. That person might make 40 grand, but one's of his expenses a month are 100 grand, right? Nothing wrong with that at all. But what happens then? Because then to that person, that 40k is nothing. They're just like, okay, that's cool. I need to make more though to cover my expenses, right? And I think it's so important to realize that. And I think it does come down to perception, and I think the comparison thing is really something that's very animalistic, back in the day, to get the girl, right, you would need to be the one who stands out, or to get the best, what they call it, shelter, basically, like, you'd need to be the strongest, right, and really stand out. And again, I think that's where it really boils down to, of like, because it's not a thing of envy or jealousy at all. It's more so like, it's I think a case where it's like, if it's possible, I should be doing it too, right? And I think it's the scaling aspect. And I think, as you've probably seen as well, once you start to focus on just your skill set and your processes that would allow you to get out of those drawdowns that you put yourself in because of the comparison, I think then it's scaled by itself naturally. As capital scaled, as you got more comfortable because you're just doing it on a consistent basis, and grounding yourself really helped to, just realize that, okay, actually I've made this much on this account. Because there's one guy, 5 Beats, right? This guy, he would always post payouts of like $1,000, $2,000, occasionally a bit more, like 5,000, for example. But a year's gone by and he's done over 100,000. Yeah. But just done these really small increments where if you looked at it, again, judging and comparing on the outside, you'd be like, oh, why is he just consistently doing small payouts, right? I can't be making that much. But then I sit down with him and he's done over 100,000 and you're like, wow, actually, it works, Yeah. Which is incredible. What are your thoughts in terms of that, though, in terms of like traders having this misconception and really thinking that you need to be 1 million funded, 2 million funded? Because you hear that like every year, or not even every year, but like every month or two, I always see someone tweeting like, my goal is to get to this much funding, 2 million, 1 million, and they're starting from zero. And I get it, don't get me wrong, having goals is good, but a lot of the time they're buying like that much in challenges at once. Yeah. Instead of just going scaling, whether it's a 200k at a time or 100k at a time, or even if they buy 400k at a time, that's fine. But instead it's like all of it at once, all this emotional pressure, and then 9 times out of 10 from what I've seen, they don't hit that goal. Yeah. I think that the reality is that a 100k account can completely change your life. You just need a 100k account to completely flip your life around. You need a 100k account to go full-time trading. You need a 100k account to feed your family for whatever time period you want. As long as then you keep consistent returns, and you will have to reinvest, obviously, because you don't want to have your whole livelihood based on that 100k account, because prop firm goes under, you go on tilt, whatever. Obviously, you need to keep that in mind. But when I say that a 100k account can completely change your life, is based on the fact that, listen, if you make 3%,
you are already doing well off. In like 99.999% of traders are already doing amazing if they are able to make $3,000 every single month. And the issue that has arisen now is that everyone is on this hustle journey, right? Everyone is like, those clips are like 10K a day is nothing. Nothing. What do you mean 10K a day is nothing? Like, not everyone wants to live this lavish lifestyle. And while you were talking, I was thinking about a person that we know that they like to go out clubbing. And when they are talking to us about going out clubbing, they're like, oh yeah, and then this table has a minimum of $10,000 that you have to spend. First of all, I don't even like going out, so I'm not going to have that expenditure, which means I need way less money to cover my expenses versus what he's doing. And then the same thing goes for all of the US traders. With all the love to the US traders, one of the things that helped me ground myself also, that would keep myself in the comparison game, but it would allow myself to ground myself, which is, like, I would see these people making 100K, 200K, or like a 10K payout. And I thought, well, that's actually only a 5K payout because you have to pay 50% in taxes. And I'm actually quite tax efficient in the sense of, well, if I make $5,000 in payout, I make as much money as them, which means I'm not going to have the same, and I'm not going to have the same expenses as someone that lives in the US or, for example, New York, where for a studio you're paying $5,000. So one of the mistakes that I did recently was, well, not mistake, again, it was all part of circumstances of moving to Dubai. Expenses now got really much higher, so I have to trade way better in order to meet those expenses. And this is one of the things that I'm being a little bit more vulnerable, so to say, because no one ever heard this on YouTube, which is I was way happier back in Portugal paying taxes with a friend, with the people I love the most, with my friends, family, everything, paying taxes. Then I'm in Dubai, where yes, you meet these high net worth individuals and you befriend them and you have a really nice life, but the stress that comes with it also is higher. Now, some people will say, oh yeah, some people are just not cut out for this. Well, it's true. It's like, do you really need $100 million? No. Like, once I get to, I've said this multiple times, once I get to like 3-5 million, you'll see me buying multiple houses, guarantee my family's future, and then I'll continue. And I was talking about this with one of your team members that, no, I wanted to say this to one of your team members, which is my first goal is to make sure that my passive income that requires active income first, obviously, because passive income is a myth, that this passive income covers all of the expenses that I need for my family for the whole year. And the number that I came to was around $10,000 a month. And again, that's overreaching 1,000%, but I would rather overreach in this case than not. And the 100K account is the first step towards that. Because once you first secure that, okay, I can make $2,000 a month. Okay, now maybe let me go full time. It's risky, but you have to take risks. Okay, now I'm full-time trading. Okay, now I'm making $5,000 a month. I'm reinvesting the challenge profits, so on and so forth. I'm putting money on the side. The 100K account can do all of that. 10% is $10,000 on a 100K account. If you do that in 3 months, which is 3% a month, that's reasonable. It's what my mother makes in a year. So I think it's pretty good. So this perception that we've had, that the reality that is being instilled onto us is 10K a day is not good enough. Oh, there are people making $1 million a day. Well, I'm not that person. Like, I'm not a...
I think most people would find themselves in a similar position in the end, you know? Because that's the thing with social media. It's, again, I always say there's positives and negatives to everything. Social media is incredible in terms of its connecting us, the amount of sources of information, news as well, Don't get me wrong, there's a lot of misinformation as well, unfortunately. But equally, it's very impressionable, especially on younger generation. So we probably got a huge portion of younger generation coming up, as long as they're on social media, which a lot of them are, from what I know, whose mindset is going to be around that. Like, oh, that's not enough money, and we need to have the Lambo, we need to have all this stuff, because that is essentially what's being promoted within their view on social media. But I think a lot of them will find, as they get older, as they go to the workforce, as they try, and as some of them may even start making money, and then recognize that none of that other stuff makes them happy. And again, it doesn't mean that there won't be people out there where it does make them happy, which is great. Because at the end of the day, the way I say it is this: is it does not matter what it is, whether it's a Lambo or whether it's just your family, right? Whatever makes you happy, and that's it. You've won if you've managed to achieve that. Doesn't matter if people don't like it, if people don't agree, if people are different. That's the whole point. And it's so important. And I do believe, yes, like the social media aspect plays a huge role, because once that is embedded into your mind, as you grow, you form these beliefs, and they are your beliefs. So it's like with me, I just assume that once I make a big withdrawal from trading, I'll be happy, right? And I remember my first big withdrawal, it's 30K. It was the same amount as all the money I'd lost in the years, right? So in one payout, I managed to write off all the losses I'd made so far in trading. And I remember just nothing happened. Like I was expecting that this big change. I expected then to be able to just do that every month. And that didn't happen either. But I just remember like I was waiting for something. I was waiting for this feeling, But in reality, nothing changes. Yes, you now got rid of the debt, have some money in the bank. But in reality, nothing else changed. And even to this day, like, yes, I make money, but it's like, and yes, I do enjoy life as well. So I don't buy luxury stuff, but I travel a lot for the pod. I take my family with me. That's all nice. And the freedom of that is nice. But again, I nearly fell into the trap of like thinking of buying a Lambo or Supercar, but it's just not me.
Yeah.
And it wasn't, again, I sit there and say I nearly fell into the trap because it felt like there was this expectation of success. Like that's the only way to show I'm successful, which is no one's fault, right? It's just kind of where social media is at and kind of like the narrative, if you will. But I just not very quickly, actually, I nearly was getting closer and closer to doing it. Even though I can't afford to do it, really. In reality, I was just doing it because I thought, okay, this is the next step, right, in the evolution. But the reality was that I realized that that's not me. Yeah. What I like is, I like cars. I'm not really into cars. I don't know, like, BHP and all this stuff that some people do. But I like old school cars, right? I like old school cars. So eventually I'll get like an old school car because I like that. I always wanted one. So I'm following what I like, Yeah. And I think it's so important because everyone is so different, and every trader will be different. Every person who wants to be an entrepreneur or doesn't either is so different. Because same with all this hustle culture and everything. Like school is so bad. You shouldn't go to school. Forget the 9 to 5. You should be your own boss and all this. But the reality is if someone is working a 9 to 5, right? Like you said about your mother, she's content. She fulfills her, right? She could easily retire, no doubt, right? At this point, and you're probably given the option, but it fulfills her. So therefore, she's won. She's, just because she's working that 9 to 5 or whatever the job may be, doesn't mean that's bad. The narrative online would say you're bad. You're a slave to the matrix. You know what I mean? But in reality, it's you're choosing to do that because you're happy. Yeah. As long as you're happy, that's the end goal with this whole thing. This whole thing of life is that as long as you're happy and content. And I think we lose that a lot of the time, in the grind. And I get it as well because I think to be successful, build yourself, you have to have a certain mindset. That doesn't mean a mindset of negativity or putting people down, definitely not. But I think it's you find very easily get lost within the numbers. Yeah. Especially in trading, it's 100K account, 200K account, the numbers can keep going higher and higher, right? And you see numbers across the people this guy's max funded 5 million, this guy's done 2 million in withdrawals, this guy's done this. And you sit there and keep thinking of more numbers, and that's the danger with numbers, right? Yeah, they're great, they're a blessing, right? And it's a way, it's like a metric of success in terms of I've achieved, unlock this door and this door. But then in reality, it's it never ends. The numbers are infinite. You can keep going forever.
And there's one key question that would completely blow all of those numbers out of proportion, which is if a loved one of yours had now a disease in which you would have to give all of your money away. You would have to pay with all of your money for that person to be healthy again. Would you not do it? Or yourself? Mm-hmm. If I had a disease right now, knock on wood, I don't, thankfully, if I had to lose all of my money to get my health back, I would do it.
It's true, yeah.
1000%. Like not long ago, my grandfather had a health issue. Thank God he's all right. And the first question I asked my mother when she told me it was a cancer that wasn't really too bad because it hadn't spread. My first question was, why are we waiting? Like, let's go private, because we were waiting for the public. For here you have the NHS. We were waiting for the public sector to call my grandfather, and I was like, no, I would forever feel guilty if something has happened in these 3 months that we're waiting when it could have been solved right now if we just pay. So for me, I know that I didn't even think about it. My number one question was, let's get him into private, and I don't mind paying whatever the amount is. And that's when the realization came, and it wasn't on this particular situation. It happened before. We would do anything for health, anything. So at the end of the day, money doesn't matter at all, but it's a very easy metric for success. And I completely get that people are chasing the money, because again, if you don't have the money, you can't pay for the private, right?
Exactly, yeah.
So I don't judge people that are going after the money. I don't judge people that are going after the career, whatever it is. But the only thing that I usually like to say is, don't forget, health is always going to be number one, because you would give everything away to get your health back. So again, money matters. Obviously it matters, and go after it, but ground yourself once in a while.
Yeah, that's what I was going to say. To round it up is like exactly what you said, is just ground yourself so that you don't get lost, right?
Yeah.
Because the last thing, you don't want to leave your health, which I've unfortunately done for the last couple of months, but that's why I'm doing that marathon. So, we're going to slim down to do that.
Yeah.
But yeah, 100%. Like, you have to ground yourself, and it's helpful to the trader. The reason we're talking about it is more so for the trading aspect side for the audience, is that just don't get lost into these funded amounts, these payouts. Just ground yourself and just recognize what's enough for you, and have the goals though. Have the goals. There's no problem. Like you said, though, playing that devil's advocate is like, when those situations happen, it's good to have the money to be able to have that freedom. That's the world that we're set up in this day and age, though, is that most of the things that we want cost money. It's a different age. There would have been a time where we could trade, things like, you have something I want, I have something you want, we trade it. While now it's not. It's all these fake banknotes, fake money, So yeah, no, I think it's a very valuable lesson for people to take on board, and which leads me on to my next thing in terms of trading wise. Simple trading edge. I've seen it all when it comes to, and I'm sure you have as well, and I'm sure a lot of the audience have too, but is that we've seen these different concepts. We've seen a lot of people when they used to come into trading, it would be like retail concepts that they would learn. So like for me, for example, I would learn about channels, key levels, Fibonacci, and so on. Nowadays, from what I can tell, is that a lot of people coming in, and they'll learn the basics potentially, but a lot of the time they're coming into, let's say, SMC, ICT, more complexities. And maybe that's one reason they're getting into it, because it sounds more complex. It has a lot of terminology and so on, and therefore there's a bit of an allure there, a bit of like sophistication, a bit of a being a bit more of a educated when it comes to trading, rather than this thing that, hey, I can just flip cash and all. No, but it's more education to that, more of a scholar, if you will. But how important really is it to keep things simple?
I genuinely believe, and I was talking with a few people not long ago saying, I think that traders are the biggest egomaniacs, because they really just like to complicate trading, to say that trading is complicated because trading is the hardest profession in the world. Go to the oil rigs and then tell me that trading is hard. Because you're emotional when you're in drawdown? Is that why trading is hard? Yes, it takes a mental toll, but being away from your family for 9 months out of the year also takes a mental toll. Just for money also, again. So we were fed this idea that trading is complex. Oh no, like the banks are after us, and because of that we need to see the sweep of liquidity. We see, oh, this people were manipulated here, blah, blah, blah. All these jargon to say, I think the market is going in this direction and I want to trade in that direction. That's all that we're all saying. Oh, it's ICT. Oh, it's a fair value gap. Oh, it's an order block. Oh, no, it's a propulsion block. Oh, no, it's an engulfing candle. Oh, no, it's this inverted fair value gap, BISI, SIBI. They're all saying the same thing with different words. And I'm like, why are you complicating? Oh, but there are two overlapping fair value gaps. Just call it fair value gap. It's a fair value gap. Why are you complicating? Because and at the end of the day, everything is support and resistance. Everything. Like the all of us just wait for a breakout. We wait for the market to reach an area that we want to trade. We take the trade and we think the market is going in this direction. But there's this whole idea that no, trading is complex, trading is hard. And I fell into that trap where in my first community, in the first 6 months, I started seeing my first 6 months were actually profitable quarters. And I thought, oh, well, so I'm profitable now. And then I fell into my own trap of, no, it can't be because trading is hard, trading is complicated, and it's probably going to take me 3 years to become a profitable trader, which means I'm not a profitable trader yet, which means that something is wrong here. This was just dumb luck. And so I was looking as to reasons as to why that was dumb luck. And then I fell into this cycle, and then within that same community, I was unprofitable. And all because of the idea that no, trading has to be hard. No, it doesn't. It can't be that easy. Like this was a clear trade. Obviously, everyone took it. Obviously, I took it too. So I'm no different. Now, I pride myself on simplicity. The simple trading edge is based on direction, and okay, this is the direction. It's maybe a 60 pip range from where price is at right now to where I think prices will go next. The two questions are, where do I think price will go first? And where do I think price is going to go after? And that range is all I'm trying to trade. Doesn't matter if I have a 30 pip stop, as long as I make money. Because, again, why do I want the 2 pip stop? Because people were swept out of liquidity, and then this was also manipulation for the smart money concept traders. So there's smart money concept manipulation, and now I'm in, and now I made 20R. Well, I just need to profit 30 pips every single week with a 10 lot. That's $3,000. So that's the way that I'm currently thinking about risk management. I think more so in lots now. And this concept of complicating is ridiculous. It's all to feed our own ego that no, if I show my charts to my best friend, he will have no idea what I'm doing. He will have no idea how I'm trading these charts in this box and react it perfectly. If I can go to any random person right now, if they really wanted to learn to trade, teach them how to learn how to trade in 3 months, and they would be profitable. Well, I'm not gonna put my hand on fire on that, but they would look at the market very, very simply.
You would want them to be able to understand it, right?
Exactly.
Yeah, because like in terms of an investor, for example, I don't think an investor really cares about like how complex your trading is. Like they're gonna ask you like, why did you take this set of trades? If you're gonna take a very complex angle, take 10-15 minutes to break it down with all this terminology, they're probably going to say, nah, I'm not interested in that. Versus, and it does not to say that there won't be investors who would be blown away by that. There will be, no doubt. But what I'm getting at is like they're going to care more about the edge itself, the data itself, the P&L, the fluctuations, and being able to break it down in a very simple manner. Just say like, I took this trade because of I think it was undervalued, there was this fundamental, whatever it may be, right? Something nice and simple, explanation, there's that trade, there's that trade, there's that trade. They're going to be, because they care about efficiency. When people have money, and just generally, when you're successful as well, it's all about efficiency. You want to be able to just look at the market, break it down very simply, have your simple confluences, know if today's a trading day or not. If it is, what do I need to look for? As you said, there's your 2 questions, follow that. And I think there's a lot of power to it, because even with like ICT traders, for example, the biggest things that I've always said, when it comes to ICT, is that it's so complex. There's so much to it, so many playbooks, so many different trading models, which is, I think, the essence of it. I think if I was to break it down, what ICT is, it's just an encyclopedia of trading models. And I think people make the mistake of, let's learn all the models and trade them all. Yeah. Versus, let me find my model that I really resonate with, and then I'll trade that. And then there might be other things outside of ICT that I put in there too, or might not, whatever. But what I've seen is there's the educators who really try and overcomplicate and really put some fugazi allure to it, and you don't really see too much good feedback off the back of that. Then you see the ones who really simplify, right? Like such as yourself, such as even Kyle, such as Casper, such as Omar. Omar just literally does AMD.
Yeah.
AMD, and that's it.
Yeah.
And then even me, when hearing about AMD, it's just such a simple concept, And yet his students and all your guys' students have shown really promising results. And I think it's because of that simplicity, and not having to sort of, question like, why was all that other stuff wrong? And then this really cool, elusive name that you've given it was really right, when in reality, they're probably very similar things all the same. Instead, they get to come in and just say, here's a very simple framework to work off. Like, how's your experience been in terms of seeing people, take on a more simplistic approach and seeing the changes? And to that point as well, like, what are the key things that you've noticed from people who do see changes, when they take on, whether it's advice, like what are their characteristics like? So are they consistent people? Is there anything that really stands out as a reoccurring theme in those who see that progress?
Well, the one theme that I see within all of the people that were successful inside of the community was that they actually put the work in. There's not one that I don't see like constantly posting on the Discord, constantly doing the back testing, constantly on the calls, interacting on the Discord. All of them will very likely then reach profitability. Might be hard at first because, again, yes, we're looking, it's not the most non-discretion way of trading, but it's a very simple way of trading. But before it becomes simple, it's something new. So people have to get used to it. Like, you don't just start skateboarding that maybe doing a very simple trick for someone might be extremely simple, but for me, I remember when I was skateboarding, it took me like a couple of months to be able to do just a simple jump. Mm-hmm. And for someone that has been doing it for 5 years, it's like, oh, you just do this and you jump.
Yeah.
But at first it's complex and then it simplifies. Now, what is the problem with all of this? Like all these complications that people add in time and price, which I also look at, but it's not as deep as, oh, at this exact minute, we had the reversal, and so this means that the algorithm is now shaping up, blah, blah, blah. In all respect to those people, because they put a lot of work in to develop that edge, and for them, it's simple. You look at their trades, all the same, all the same. But my goal is to get people from inconsistent and I don't know how to look at the market into consistent and I know the direction of the market and I can take a trade in line with that direction the quickest way possible. Mm-hmm. And the two highest success students that I had, what they did was they learned exactly what I was doing. So then they nailed down the direction. And then they developed their own entry models, which is more aggressive than the way that I trade. But they're like, well, I'm 80% sure that the market is going to go in that direction. So I don't even need confirmation. I'll just enter. And they're a highly, highly profitable, multiple payouts, multiple funding. So it's all about putting the work in, learning very simple concepts. Again, AMD, one of the ones that I use. For me, it's the power of 3. It's basically the same thing. And direction. It's all. And one of the biggest complaints that I see people on like YouTube and so on saying is, oh yeah, you called the direction, but you didn't trade it. Well, but if you just traded it and you didn't get the direction right, you took a loss. So who's winning? So what is a trade? Is an execution in the right direction. So if you already have the direction, now you just need to nail down the execution. But everyone is thinking the opposite way around. Oh no, I need to execute and be profitable. You don't even know where the market is going. So most people should just focus on, okay, let me nail down the direction, which is what to me is the daily bias, extremely important. The two questions, where will the market go first? Where will it go after? That gives us the range, and that's what you trade. Like, by simply knowing that, I've told everyone inside of the community, you can trade whatever market you want to trade. It was not long ago, I was doing a call, and during the weekend, I was in a family dinner, and they were saying, oh yeah, the coffee of price is going up. And I was like, let me check the futures chart on coffee. And then I checked, and we had like big impulse up, market was retracing. And I was like, okay, I expect this fair value gap. I expect the market to move up from here. And then a couple of days after, I checked the coffee charts, because I was like, guys, whatever, I can pull up any chart and you'll see that you can trade. And I hadn't looked at the chart anymore. And the analysis was like perfect. And I was like, it was funny because I was like extremely happy in the call saying, is this not proof that you can trade any market you want by knowing 3 simple concepts? Direction, understanding who's making and who's losing money. That's the power of 3. That's accumulation. Accumulation, manipulation, distribution. It's like who's making money, who's losing money when there's the manipulation, and then the actual move, and then just trading that. Direction, manipulation, execution. That's all you need. But everyone likes to then say, oh yeah, but then this SIPI and fair value gap and order block and proposal, like, just call it fair value gap. Just call it order block. It's so much easier. Oh, but then we had this manipulation, this sweep, it was smart money concept trap. Just call it manipulation. It's that simple. It's a liquidity sweep. Okay, the market is now moving in my direction. I'm going to enter. You don't need more than that, unless you want to pat yourself on the back because you were able to complicate a simple thing. So it all stems from ego. And to me, most important thing, teach people the direction, and then teach them the execution, and then them becoming their own traders that they know what they want to execute on.
What time frames would you focus on for direction wise? Like when you're coming to get the daily buys, what time frames are you looking at?
Weekly, daily, 12-hour, and 4-hour is the lowest I'll go on the weekend. Because what are you doing on the weekend? Okay, I want to know where the market is going to go this week and where the daily is going in the next coming days. So why are you on the 15-minute? What, are you going to forecast what the next 2 Asia sessions are going to do? No. So just stick to the 4-hour. That is not going to move that much. Within one day, you don't have that many 4-hour candles. Within one day, you have 2 12-hour candles. Forecast those first. And then before entering a session, that's when you forecast on the 15 minutes, 1 hour, so on and so forth. If people really want to simplify, don't go lower than the 15 minute, especially on FX. Like on NASDAQ, I completely get people going onto the lower time frames, but that becomes a full-time job. The power that I want to give to the people is you can trade whatever time frame you want to trade. Some people come to me and they're like, oh yes, but I work 12 hours a day and I can't check the charts. Trade the daily. I'm giving you the concepts that will allow you to trade the daily. And I'm not breaking, like there's no scientific mathematical thing. It's just, this is what I'm looking at. And you can do the same. So, and a lot of people were full-time traders, and when I was asking them how they are trading, they're like, oh yeah, so I trade the 4-hour. And I'm like, whoa, the 4-hour? And he was like, yeah, I trade, I work most of my day, I can't check the charts, so I just trade the 4-hour. I was like, are you profitable? Yeah. Another thing, I did a Portuguese meetup, and every time I do a meetup or every time I meet anyone that is a trader, there's 2 questions that I like to ask. 1, how are your trading results? 2, what time frame do you enter on? The most people that are not satisfied with their trading results are trading below the 15-minute, like 5-minute, 1 minute, mostly. And then ask, okay, what's your stop loss size? Oh, it's like 5 pips on EU. My average stop loss size is like 15 to 20. Why? Because it gives me so much time to be maybe wrong, but then be right. It just gives me time. Because if I know the direction, I can put any trade, put 50 pip stop, eventually it will hit TP. Well, obviously not 100% of the times, but the most common pattern within the unsuccessful or unhappy traders that I see is traders that are trying to trade the 5-minute and the 1 minute. And then the other thing that I noticed is that instead of trying to make their trading fit into their life, they try to make their life fit into their trading. So, for example, let's say I work 9 to 5, but I really want to trade NASDAQ at market open. Well, I can't because I'm at work. But let me check my phone while my boss is not looking, and then I'll enter in a trade, blah blah blah. No, you don't have the time. Instead of, like, you need to understand that your trading needs to fit your life. It's not your life that needs to fit your trading. People are thinking everything the other way around.
Mm-hmm.
That's why if someone is on a full-time job and they're telling me that they're trading the 5 minute, I ask them, so how's your mental within your trading? I'm always stressed, then I might miss the move. Well, obviously, if every 5 minutes a new candle is printed, obviously you're going to be stressed. When I was working full-time, I was trading the 1 hour. I wouldn't go anything below the 1 hour. Why? Check the 1 hour. Okay, every 1 hour, check the phone. Okay, nothing. Boom, go back to work. But everyone has the other way around. And the concept of the simple trading edge is to simplify everything. Your trading, your technicals, and your life. Because I'll be the first to say, hey, if you have a full-time job, you cannot afford to go to the 5 minute. Don't go to the 5 minute. Mm-hmm. And if you have a full-time job and you can't check the computer or your phone, don't go to the 15 minute. Do the 1 hour. The same price action that happens on the 1 minute happens on the 1 hour. The same price action that happens on the 1 minute happens on the daily. People just miss that point. And if they simply understand that the 1 minute is going to give you a more trade frequency, but it's also going to give you a lot of false signals, mm-hmm. they'll understand, okay, there's opportunities in every time frame.
I think the biggest issue is that they don't give themselves time to adjust. You know, they'll be used to the 1 minute, so they're used to being in and out, the erratic nature, the multiple more trades. You know, because even if they say take a loss or two, you know, before getting the winning trade, it's all happening within an hour, let's say. Yeah. Which is crazy in terms of emotions. But if they then take that fractal nature to the 1 hour, there might be a day, you know, it might be 2-3 days before those, you know, those losses and wins take place, right? The losses might not even happen because they're on such a high time frame, but they haven't given themselves time to adjust. So they're just taking the same mindset, the same characteristics, and putting it on the 1 hour, where they'll get out and then jump straight back in, not even wait for a candle close, not wait for anything, jump back in. And then they call that, that's not working, doesn't work yet, let me go back. And then that becomes a cycle. Yeah. But I think it's very important what you've highlighted there. You're keeping it simple, understanding your routine, making trading fit your life and not the other way around is very important, because I've seen people, and don't get me wrong, it can be a struggle obviously doing that. And it's a sacrifice you have to make in the short term for the long term. Again, going back to what you said previously. Let's finish up in terms of like your top 3 tips. You know, at this point, you've gone through futures. You've gone through a lot in your journey. You've documented your journey well, which I'll talk on before we wrap up. But you know, what would be your top 3 tip for traders in 2024, right? Let's take the traders from in the boom and bust cycle, the ones who have knowledge, but they're not consistent yet. What would be your 3 top tips to them?
So number 1, increase the time frame. Don't stay on the lower time frame. If you are on that boom and bust cycle, you are probably entering in a lot of trades that is allowing you to go through those cycles very quickly, which doesn't even give you time to adjust. So increase your time frame, reduce your trade frequency. It's the number 1 thing you have to do, because if you're constantly making mistakes by entering, like every trade is one step closer to a mistake, what do you want to do? Reduce the number of trades to reduce the number of mistakes. That gives you enough time for you to then adjust. Okay, I've made this mistake. The next trade is only coming tomorrow. Let me journal everything very, very clearly. So number 1, 1000% of the times, increase the time frame. If you don't like your trading results, increase the time frame, especially if you're on the 1 minute or 5 minute. Mm-hmm. Like if you don't like your trading results and you're on the 1 hour, then look through what is it that you're not really liking. Then number 2 is, I would say I will do 2 and 2.1. 2 is going to be very quick. Again, your trading should fit your life. Your life should not fit your trading. That's the tip number 2, but tip 2.1 that goes barely in line with that, which then goes into the finances, which is never, if we're talking about prop firm traders, never buy a challenge that you're too afraid to lose. Every time you're putting more money in that you can afford to lose on a challenge that can be lost in a week, 2 weeks, you will go through those boom and bust cycles. You will go through those negative spirals of, okay, I just lost this. now I know that I'm $1,000 down, so I need to get funded, and then I need to get this payout. So this pressure is going to build up the negativity, and that happens when your income cannot cover those challenges. That's when you'll go into this tilt of, I need to make it back, I need to make it back. And a lot of people, we don't hear about them because those don't go viral on social media. A lot of people have lost a lot of money like that. Like back when prop firms were sharing the statistics, we heard of people that wasted $35,000 and got $200 in payouts. But those people don't go viral on social media. You hear the other side of the coin. So in terms of your finances and making your trading fit your life, just start smaller. Understand a $10,000 challenge can completely change your life. Because if you're from Portugal like me, or from a third world country, or if you just have small expenses, if you can trade and build up from 10K to 50, then 100, slowly but surely, where you're not losing a lot, you will eventually be able to change your life. And then, last but not least, I think this is one of the most important ones, and it's not trading related, but it goes very easily into trading, which is whatever actions you're taking now are going to determine where you're at in 5 years' time. That was one of the biggest wake-ups for me. Because let's apply this into trading first. So today you think, I want to pass this challenge, so I'm going to risk 4%, and I can't really afford this, but maybe I'll pass it. This behavior that you're having right now, especially if you pass, is going to start creating this habit that will then lead you into a negative spiral, and you will lose everything. And in terms of life, I think about this. If you don't like what your life is looking like right now, think about, what did you do these past 5 years? If you are unhappy with your life, what were you doing these past 5 years? Most people will answer, well, I wasn't really working, probably playing games, probably going out and party with my friends, never focusing on myself, always focusing on other people. So the life that you have right now, removing certain circumstances that people can't control, health, so on and so forth, that people can control, but sometimes things happen. For 99% of people, your life is the current life that you have is determined by the last 5 years of work that you've put in. If you didn't put any work, you're probably not way ahead of where you were 5 years ago. And then think about that for the future. Whatever you're doing today is going to affect 5 years, 10 years, 20 years down the line. And there's this famous Chinese saying, I believe it's Chinese, which is the best time to plant a tree was 20 years ago. The second best time to plant a tree is today. And that's exactly what this is about. Oh, but I didn't plant the tree 20 years ago. Well, in 20 years, you'll be thinking the exact same thing.
Yeah.
So take the action now that is going to change your life in the next 5 years, 10 years. And it's not going to be instant. Don't think it's going to be instant, because nothing worthy is going to come fast. Everything that comes fast goes fast.
Yeah.
And I've had that with money, relationships, everything. I've experienced so many things that came fast, went fast, very quick.
I love that. Especially that last thing there, especially because there's no perfect time. I mean, a lot of people are just waiting for the perfect time to start whatever it is, diet, social media, trading, working on themselves, a relationship, whatever. It's always the perfect time, but there's never a perfect time. The perfect time is just now, like you said. And which leads, that last point you mentioned there, in terms of your journey, like the things you've experienced, leads me on to the ending here, which is Kimmel is one of the very few people in this industry, I would say, who has consistently documented their journey from very early on, the highs, the lows, the lessons. And I would definitely recommend just go back on his YouTube channel. You might not want to because he looks very different, but go back on his YouTube channel and look at those old videos, because that is a true testament of a trading journey. Literally like back from the early days to now and still continuing. It's very rare to see that, and I think it's huge testament testament to him, his commitment to documenting his journey. That's the reason why he is in the position he's in terms of, you know, his stature in the community, and why so many people, you know, like his content and follow his content as well. And now he's giving back and continuing to give back on the social media front, but also with the Simple Trading Edge. The links for all of that will be in the description below, so make sure you check that out. I could have spoken to Kimmel for more and more hours. We've already filmed something before this, which hopefully by the time this comes out you might have seen, so let us know your thoughts on that. That episode will probably be on screen actually right now, so check that out. Hit subscribe, and until next time, take care.